Hey everyone, so in this video we'll look at what exactly refractories are, where are they used, right? And also which are the listed refractory stocks in India and which one amongst them is like the best one right now to trade or invest, right? So we'll first look at what exactly refractories are. So refractories are those materials that are used in furnaces, kilns, incinerators and reactors. Why are they used there? Because they can sustain very high temperature without losing the properties, right? So when you're handling something that is extremely hot, you make use of these refractories, right? So they're mostly used to make crucibles, right? And more for casting glass or metals, right? So in if we look at where exactly it is used in the steel industry, so we are mostly in India, most of these reactors, I mean refractories, they kind of supply to the steel industry. So these are used in lining for steel application. Refractory lining we would have. So in all these argon oxygen decarbonization, basic oxygen furnace, and all these blast furnace, coke oven and decasser, in all these we are going to be using refractories. So that means whenever we are producing steel, this is going to be used as a consumable, right? The more you produce, because you can't keep on using them, these are consumables. So after, let's say, sometimes they use it once or for a few runs and then they change this. So the more steel you produce, the more refractory you'll be using. Okay, then we'll move on to, so in India what is happening right now is the steel prices are stable but the production is moving higher, right? So this chart here explains how the steel prices have moved, right? After COVID we went up from a level of 30,000 rupees for a ton to kind of 60,000. From there we are somewhere around 43,000 right now. So there is no real movement, and if you look at the chart, it has been slowly coming down, correct? So what is this chart doing? It is making a lower high, lower low. So, what you guys would say that steel prices, I mean, steel stocks have been doing really well. That is because the production is moving higher. The prices of steel are around the same level. So, if you look at the operating profit margin of most of the steel companies, those are at the same levels. But what is happening, because they are producing more, they end up having higher profits, right? So this graph kind of tells us that the steel prices are back to where it were around, let's say, 2021 thereabout. All right, but the overall structure as of now for steel kind of suggests that it is making a higher high, higher low, which is kind of a bearish thing. But like I was telling you, the production has been very good. So India became the world's second steel producer. So what is kind of fueling this rally in the steel market is the government has been taking steps to kind of boost the infrastructure, the construction. As you guys know, the real estate has been going through the roof. The construction sector, more roads have been built, and mostly cement roads right, nowadays, right? Infrastructure like dams and canals, all those stuffs are being built, and also like shipbuilding. So you have seen how these shipbuilding stocks have gone through the roof, right? So there as well, a lot of steel is consumed, and also automobile. So if you look at the automobile sales, they are hitting new highs, right? So all these are consumers of steel. So because India is doing really well, the steel consumption is kind of moving higher. So does that mean that we are in a global up move for steel? No, because the global scenario, the global steel prices are not really moving. But because India is consuming a lot of steel, the prices in India are a little on the higher side. And also what is happening is, because the companies are producing more and more steel, they are ending up having higher top line as well as the bottom line. Okay, so as they produce more and more steel, definitely more and more refractories are going to be used, right? So if we look at which are the major ones that are producing these refractories in India, and also which is the best among them at the current valuation that they are at, right? So there are almost around like 6 7. The smaller ones I have not taken. The best three, right, are RHI magnesite, Vesuvius India, and IFGL Refractories, right? So if you look at these companies, so RHI Magnesite is like the number one because they have the highest sales around 2,728 crores, right? Second comes Vesuvius and IFGL Refractories are around the same level of 1,600 crores. But if you look at the P, RHI Magnesite gets the highest around 66, then comes Vesuvius as at 32, and then comes IFGL at 24. Now you might say IFGL should be re-rated because it is doing same sales as Vesuvius, but it is at a lower P. So the thing is, it is not really about the sales that the company do. At the end, it is kind of about the operating profit margin, because you want to know how well the company is managing its raw materials and then selling its products at a premium, right? So out of these three, Vesuvius has the highest operating profit margin of 18%, which is almost 1.5 times higher than RHI Magnesite and almost twice that of IFGL Refractory, right? And also, if you look at the ROC, right, which is return on capital employed, very important. So there, Vesuvius has been doing the best, right? So its ROC is more than double of both of them, right? RHI as well as IFGL, and also the P multiple is kind of much lower than the leader RHI. It is almost half of the leader, right? So no real reason for it to be have a lower P than the number one player, because its other financial ratios are much better than the leader, right? So if they kind of do decent capex and stuff, and if their sales kind of match what the leader is doing eventually, like over a few years, then probably even the Vesuvius can get that kind of a P in the coming years, right? So this is about the peer comparison. So the best one would be Vesuvius here, wherein you would want to kind of trade that particular stock for short term. So why I'm telling you short term is because there is a global scenario wherein US can go under, right? So if that happens, all these metal stocks are going to correct pretty I mean, there would be a decent correction in most of them. So if that happens, then chances are that everything is going to go under. So in that scenario, you would want to just kind of trade them for the short term. So if you look at the chart of Vesuvius, it has made a inverse head and shoulders, right? So where the neckline is around 3483, right? Or let's say 3500. So once that is broken, then the target would come around 4000 rupees, because you usually take the height of the head from the neckline, right, which is almost 500 points away. So Vesuvius fundamentally looks good, and also on the charts it is making an inverse head and shoulder, which kind of makes it a reasonable bet at these levels. In case if it crosses the neckline, chances are it is going to hit 4000 rupees on the charts. And also there is a tailwind for it, because the steel consumption, or let's say the production of steel, is going through the roof. Definitely the results that are going to be posted should be very good for Q4 for all the refractory companies. Hope this helps. Thank you.